As of November 21st to 24th, 2025, the global financial system flashed a rare and unexpected signal. A sharp Bitcoin adjustment triggered a multi-layer liquidity reaction. And today we explain why this event matters far beyond the crypto market. This isn't a prediction. This is a structural read of what the global flow system just revealed. The 11/21st move wasn't driven by fear, regulation, or sentiment. It was triggered by liquidity compression, a period where the market temporarily demands more dollars than the system supplies. Three patterns appeared simultaneously. Bitcoin liquidity thinned, cross-asset volatility lifted, short-term dollar demand spiked. When these three align, the system forces a repricing event. Bitcoin became the most visible signal, but it wasn't the cause. This was a liquidity stress test, not a structural collapse. The dollar's behavior during the shock told a real story. It strengthened without policy changes. It moved independently from yields. It pulled capital from risk assets. It absorbed global liquidity demand instantly. This pattern appears when the world temporarily recalibrates its exposure, and capital seeks short-term safety before re-expanding. The event exposed a deeper truth. The global system is preparing for a 2025 liquidity rotation. Bitcoin has become a liquidity-sensitive asset, especially after ETF adoption and increased institutional participation. When dollar demand jumps, assets closest to liquidity channels react first, and react sharply. What happened on 11/21 wasn't a crypto story. It was a liquidity prioritization story, with Bitcoin acting as the early warning signal. What makes this event important is what happened next. Gold stayed firm. Energy remained stable. Dollar demand eased without follow-through. This is unusual. In classic risk-off cycles, gold spikes, energy drops, and the dollar surges. But this time, we saw a non-traditional alignment. A liquidity shock without a full market reaction. This pattern usually appears before a cross-asset rotation phase, where markets shift from reaction gives positioning. Over the next few weeks, monitor three indicators. Dollar liquidity windows. If demand keeps easing, the shock was transitional. Energy volatility stability would confirm the early 2025 repricing cycle. Gold behavior strength without stress signals structural positioning. The 11/21 move wasn't the destination, it was the message. If you want the signal behind the noise, subscribe to Global Pulse 360 Live.